Hi, it's the Fat Day Trader here, and welcome back to my channel. In this one, I'm going to deliver something very special because I know you are looking for this type of thing and you are hungry for success. Now, you probably already know what the RSI is, but for those of you who don't, I'll explain in just a moment. Then show you all a simple trading strategy using the RSI indicator that might help propel your trading to another level. Does it sound good? All right, let's tuck in. What you will need is a trading account with a broker. For any of you that are interested, I have been trading with TIO markets for about a year. They can provide you with everything you need to trade the kind of strategy I'm going to show you here. So if you don't have an account with them, head over to tiomarkets.com and open one there. I'll also share a promo code in the description you can use when you deposit some funds. To start, you will need a clean price chart of your favorite instrument, like I have here. For this demonstration, I will use the euro versus the US dollar on the 4-hour time frame. The first thing you want to do is click Insert at the top left-hand side of the trading platform. Then go to Indicators, Oscillators, and click on the Relative Strength Index, otherwise known as the RSI for short. Now, what we want to do is add a 14-period RSI. Configure the parameters like this and change the color and line style to your liking, then click on OK. There it is below the chart. Nice. What this will help us with is identifying the relative strength or weakness of the instrument we will be trading, as well as generating our trading signals. Because the way this RSI trading strategy works is by using the RSI to identify turning points in the market. Does it sound good? Okay, let's move on. Now what we need to do next is add a 50-period simple moving average of price on the chart. So, click Insert at the top left-hand side of the trading platform again, then go to Indicators, Trend, and click on the Moving Average indicator. Configure the period setting to 50. Like this, then click on OK. There it is. Nice. What this will help us with is identifying the trend, and to filter out some trading signals from the RSI that have a lower probability of success. Yep, this is a simple RSI trend following strategy that even a beginner can understand. The only thing that is required to use it is a basic understanding of how to read the charts and the RSI indicator. Right. So this is how the strategy works. When the price is above the 50-period moving average, you should be bullish, which means you should only be looking for buying opportunities. When the price is below the 50-period moving average, you should be bearish, which means you should only be looking for selling opportunities. Is it clear so far? Okay, good. If you understand and apply just this to your trading, you will already be ahead of the average trader. Most people who try trading don't have a methodology and try to trade every up and down movement in the market. That can get you into trouble. No, don't do that. What you should be doing is identifying the trend and trading in the direction of the trend. So now you know what side of the market you should be focusing on. The next question is, when to buy or sell? Or what are the trading signals for this strategy? I will try to keep this simple, because the RSI is intended to indicate two things. The first thing it indicates is when an instrument is overbought and when it is oversold. Or in other words, when it is expensive and when it is cheap. This can be used to generate trading signals, but I wouldn't recommend it because it can be quite unreliable at times. You will find that even though the indicator is overbought or oversold, the price can keep going up or down for extended periods of time. The second thing the RSI can indicate is convergence or divergence with price, which is a far more reliable indicator to use for trading signals. This is how this works. There will be situations where the price and the RSI move in opposite directions, meaning the price will either make higher highs while the RSI makes lower highs. Alternatively, there will be times when the price will make lower lows while the RSI makes higher lows. When price and the RSI diverge, it provides us with a heads up that momentum is likely going to shift. So you can position yourself to trade the reversals. Does that make sense? Let me show you an example. Do you see these two lows in the RSI here? The second low is higher than the previous low, but look at what the price has done. It has continued to make a lower low. This is also an example of divergence. And we can see what happened next. The price reversed and started an uptrend. Let me show you another example. Do you see these three peaks in the RSI here? Each peak is lower than the previous, but look at what the price has done. It has continued to make higher highs. Each peak is higher than the previous one. This is divergence, and what we can expect to happen next is for the price to fall. Then, there will be situations where the price and the RSI move in the same direction, meaning the price will either make higher highs and the RSI does the same. Alternatively, there will be times when the price makes lower lows and the RSI does the same. When the price and the RSI converge, it can also provide us with a heads up that momentum is likely going to shift. So you can position yourself to trade with it. Let me show you an example. Do you see these two peaks in the RSI here? Each peak is lower than the previous, and there are also two corresponding lower peaks in the RSI. This is what we refer to as convergence. And price continued to create another swing low afterwards. The same thing applies to the lows. Look at this example here. This low in price is higher than the previous low, and the two corresponding lows in the RSI were also higher. Then price resumed the uptrend. I like to look for convergence or divergence that involves three highs or lows, just because it's a stronger signal. But convergence or divergence that involves two highs or lows is also good too. So, now you know what direction to focus on and what constitutes a buy or a sell signal. But I will summarize everything for you now. When the price is above the 50-period moving average, you should only be looking for buying opportunities. The buy signal occurs when the lows in the price converge or diverges with the RSI. When the price is below the 50-period moving average, you should only be looking for selling opportunities. The sell signal occurs when the highs in the price converge or diverges with the RSI. Do you get it? Okay. It's that simple, and I probably know what you are about to say. Should I wait for three or just two highs or lows? What should I do if price starts going in the opposite direction? When do I get out to stop losses or take profits? Well, this is where your risk management comes in. You should already know that no trading strategy is right 100% of the time. Every trading strategy has losing streaks. You just need to implement rules to limit losses, while simultaneously trying to maximize your profit potential. Let me show you some ways you can do that with stop-loss placements and profit targets. So, the first thing you might want to consider is the structure of the market. If the price moves in the opposite direction and goes above or below the most recent high or low, it might be a good idea to close the trade and accept a small loss. Now for the potential profit targets. I have two techniques you can use here. The first technique will allow you to let the profitable trades run, so as long as you do not see any divergence between the price and the RSI, you stay in the trade. You just wait, let the trade run and get out when you see divergence. If you are patient and disciplined enough to do this, you might catch some mega trades, and it's all good. The second technique is to close the trade when the RSI indicates that the instrument is overbought or oversold. This would be the 70 and 30 levels respectively. When the RSI crosses above the 70 level, you can close your buy position. When the RSI crosses below the 30 level, you can close your sell position. Yes, there are going to be times when it won't get there, but you have the first technique to fall back on. You can take this system as is or customize it to your liking to make it your own. This is a very simple RSI trading strategy that can be used in any market and on any time frame. If you like fast action and want to trade more frequently, then focus on the lower time frames. If you can't monitor the charts that often, then focus on the higher time frames. Just pick one instrument and a time frame you are comfortable with and give it a try. That's it, people. Good luck, and let me know how you get on. Also, remember to like the video and subscribe to the channel. It's the Fat Day Trader here, and I'll catch you in the next one.